Hey traders, if you want to start the scalping strategy where you don't want to depend on any technical indicators, you want to depend on pure price action trading where you analyze the market data, the patterns and the market behavior without relying on any indicator, then this video is for you. Welcome back. So as a scalper, the first thing you want to do if you get to your screen is to observe the overall market structure. So how do you observe this overall market structure? Is for you to go to a higher time frame and see the market reaction. Please check the higher time frame. What is the overall trend of the market, right? Here we can see that the overall trend of the market is a bullish trend. You can see that the overall trend of the market is a bullish trend. Remember, if the overall trend is a bullish trend, trend doesn't mean that on a lower time frame at that particular moment as a scalper you cannot sell. It doesn't mean that you cannot go for a short position. As a scalper, you can go for a short position and a long position within some specific period of time in a day trading, right? So scalping doesn't mean that because the overall trend is a bullish trend, then you will not go for a sell position if you see the opportunity. You get my point? Because if, for example, as a scalper, which you don't take a lot of time in the market, you spend just few minutes in executing your trades, in the entry and exiting your trade. If, for example, the overall trend is a bullish market and you go to a lower time frame like the 5-minute time frame, throughout that day the overall trend might be a downtrend. I hope you get me. Throughout that day the overall trend might be a downtrend. You see the strategy there. So that checking that overall trend doesn't mean when you see a short position you will not go for a short position as a scalper. You get my point? It doesn't mean that you will not go for a short position as a scalper. So let's see the 4-hour time frame. On the 4-hour time frame, we still have the bullish trend as our overall trend. Let's come to a 1-hour time frame and see what's happening. So on the 1-hour time frame, you can see that we have a downtrend here. You can see we have a downtrend around the side that last, let's see the date it started. This on Monday 20th May. Let's see when it's, you see, this is 21st May, on Tuesday 21st May. I hope you can see the date at the down of my screen. Then let's move forward and see. So this is on the 22nd of May, you see, on Wednesday. Let's move forward and see. This is on the 23rd of May on Wednesday, you can see, and this is on the 24th of May on Wednesday, and this is on the 24th of May. Yeah, so you see, for a good 5 days or 6 days this market has been in a downtrend. So because, for example, you checked that the overall trend is a bullish trend, doesn't mean that as a scalper you cannot go for a sell position. You can actually go for a sell position. That is why you need to carefully analyze the market structure. Is this market in a ranging market that is consolidating? Is it in a trending market at that moment? So all this, you need them in check. You need them in check before taking any position, right? So, and you need to check your support and resistance. You need your trend lines also. This will assist you in making decisions. So as a scalper, if you want to trade, after checking the overall trend, okay, we've seen that the overall trend is a bullish trend, and now we are on the 1 hour time frame. You can see that for good 6 days or 5 days, this market has been in an uptrend. You see, this market, so one needs to be very careful once you want to trade pure price action. You need to be very careful. There are confluences you need to check. You need to check your hammer candlesticks, your pullback candlesticks, your engulfing candlesticks, all these things, and you need to study your candlestick patterns very well. You need to study your candlestick pattern very, very well if you want to trade pure price action, please. So now let's move to a more lower time frame and see what is happening. So now we are on the 30-minute time frame. We can see that yes, on the 30-minute time frame, we still have the downtrend as the overall trend. So now you can see we have where the markets come down to this is our support zone. Let's get another trend line. Here will be acting as a support zone for us, and here will be acting as a resistance zone, right? So as a scalper, you can actually take both sides also using your trend line. You see, using your trend line, you can actually take both sides. If this market comes to this your resistance zone, you would take a short. You see, if this market comes to your resistance zone, you would take a short, and once it comes to your support zones, it means you are going for a long position. It means you are going for a long position as a scalper. So you see how important using your trend line is as a scalper. Your trend line can serve as your support and your resistance zone, and also your horizontal line if the trend is not in a sloping way, meaning if the trend is not like this on a slopy way, that is falling down just this way, you see, just the way you mark the trend line and it went down. If this trend is not in a slopy way like this, you can use your horizontal line to mark the zone where you think that, okay, this market keeps going there and coming down. It keeps going there and rejecting and coming down. That's when you will now get to use your horizontal line. Let's look for where we have such okay. Here we observe the markets. We observe the markets got to this place and rejected it, then came back to this place, then went back to this place, then came back to this place also, right? But you have to be very careful when trading this place. You have to be very careful when trading. You can see here we have a breakout. We have a breakout around here, and after this breakout, what did you see? After this breakout, what did you see? It went up and came back to retest the zone. It came back to retest the zone. You need to know all this. It came back to retest, and immediately after the retest, it went up. So knowing your market structure is very important if you want to be a scalper. Knowing your market structure is very important if you want to be a scalper, and you need to learn your candlestick reactions, please. Each candlestick here has its own meaning, so you need to learn the candlestick reactions if you want to trade as a scalper. All these are very necessary if you want to trade as a scalper. So you can see, and you know, this scalping you don't stay long in the market. Immediately we have this retest, you entered for a long position, right? Probably you targeted maybe like 50 pips to 100 pips, for example, and you're out of the market. You will not just hold that trade for long, please. You will not just hold that trade for long because you are a scalper. And if you are in profit, always move your profit to your stop loss to your break even area or to a profit area, right? Always move and don't stay long in the market. After you are out of the market around this zone, wait for another opportunity. Wait for another opportunity, right? Wait for another opportunity. And probably most scalpers are even advised to take their trade entries after analyzing the market on like 15 to 30 minute time frame. You can come and take your entries around the 5-minute time frame. Around the 5-minute time frame, you get. Let me zoom this in for you to see. So you see, this is the 5-minute time frame, because there you see the market clearly. You see what exactly is happening. You quickly see where a market wants to break or change direction, right? You quickly see where the market wants to break or change direction. Let me show you another strategy on using the pure price action in scalping. Let me show you that right away. So another strategy you can use in scalping is your price patterns, or you call it your chart patterns. Knowing your chart patterns too will also assist you when you want to scalp, right? So let's say, for example, the normal W pattern and the M pattern or W pattern, which is the top and bottom patterns, right? If you want to trade such patterns, we already know that it's usually have the double top. This is a typical example of a double top, and here is a neckline, right? So knowing how to trade this pattern is that once a trade, the candlestick crosses the neckline and breaks below the neckline and close below the neckline, we'll take a short position. In most of the cases, that is how to trade the pattern, right? Some conservative traders can put their stop loss just above the neckline, while some can put their stop loss above the top, right? And your TP can be 2 times your stop loss. Around this side, you can put your TP around this side or around this side, right? So on the other side, which is the W pattern, you follow same procedure. So you see, if you want to scalp with this strategy, anywhere you see that okay, a W forms or an M form, you follow same strategy. Let's look for a W pattern. So this is a typical example of the W pattern. If you notice, you can see we have the double bottom, right, which you can also call the W pattern, and you can see that we have a neckline here, right? We have a neckline here. In this case, after the breakout, it came back for a retest. It broke the neckline, right, and came back for a retest. So if your stop loss is below your neckline, as a conservative trader, it still will not take you out of the market, right? Still will not take you out of the market. Or you can put your stop loss just below the bottom, right? So you see how this strategy work. You can use this in your scalping also without using any indicator or trend line. You can also check out the head and shoulder patterns. Also, you can check out the rising wedge. We have so many patterns available. We have the flag patterns also available. We have the ascending triangle pattern. So many patterns that you can use. If you master them, once you see them, then you take the necessary action, right? So now there are also other ways to trade this. You can also use your volumes, right? You can also use your volume analysis to analyze the market using the volume movement of the market, using momentum candle. Is what is happening right now in the market. What's the volume of the capacity of buyers in the market, or the capacities of sellers in the market, to use to take your trades. Aside that, you can also use your engulfing candlesticks. If a bullish candlestick engulf a bearish candlestick, you can also use that to scalp also. What do I mean by engulfing candlestick is that if, for example, you have a let's say a bearish a green candle, you can see a green candle right here, and you have this big bullish candle. You see this big bullish candle which engulfs this previous candle, right? It engulfs this previous green candle, meaning it swallow. If you put the body together, you see that this is bigger. That is what they mean by engulfing candle. So automatically you know that definitely this has engulfed this, then the market will further go down. So in this case, you can scalp with that strategy also. So we know that in scalping you use your market structure, right? Like I told you earlier on, you use your market structure, you use your candlestick pattern, you use your support and resistance level, you use your trend lines, right? You use your price patterns, you use your volume analysis, right? So please try all this, learn this. These are very important to know if you are a trader. All these are very, very important to know if you are a trader and if you want to be that profitable trader, right? So thank you for watching this video. Kindly hit the subscribe button if you are yet to subscribe to this channel, and share these videos so that others can benefit. Like this video. See you in our next video.